Imagine waking up one morning and realizing that your money earned more while you were sleeping than you did all of last year at your job. Have you ever felt like the wealthy are playing an entirely different game with their finances? There is a hidden tipping point where the struggle to earn money transforms into the power of having money work for you. It is not just about having a high salary or a large home. There is a specific mathematical line that changes everything, and it is probably not what you expect. I have spent a long time investigating wealth patterns and watching how people behave as they cross major financial milestones. What I discovered is that hitting $1 million in actual investments triggers a total shift in reality. Note that I am talking about money that is actually invested and working, not just your total net worth or the equity in your home. Most people assume building wealth is a linear journey where having $200,000 is just twice as good as having $100,000. But in the world of high finance, the rules of the game are not linear at all. When you reach that seven-figure mark in invested assets, the fundamental mechanics of your life change forever. You are no longer a person who simply sells their hours for a paycheck. You become an owner of capital that generates its own momentum. This is not just some deep philosophy. It is a hard mathematical truth that dictates how you live and how you think about risk. Let us look at the numbers because they are truly eye-opening. If you have $10,000 invested and earn a 7% return, you make $700 a year. That is a nice dinner or two, but it does not change your life. At $50,000, that same return gives you $3,500 annually. It helps with the bills, but you are still tied to your desk every single day. However, once you hit $1 million, that 7% return produces $70,000 every single year. Think about that for a second. $70,000 appearing in your account without you lifting a finger or enduring a single minute of a commute. In many places, that is more than a full-time salary. Yet it requires 0 hours of your time and zero workplace drama. Recent data shows the average household spends around $67,000 a year. This means that at the $1 million mark, your money is not just helping you, it is potentially funding your entire existence. Your investments become your most loyal employees, working 24 hours a day while you travel, sleep, or spend time with the people you love. This is the moment where capital finally starts to outperform labor for the average person. Once you cross this threshold, your relationship with money goes through a massive psychological shift. You stop being a saver and you start being a capital owner. A saver is focused on accumulation and playing offense, trying to add more to the pile as fast as possible. But a capital owner focuses on preservation and optimization. You are no longer trying to get rich because you are already there, and now the goal is to stay rich. This requires a completely different mindset regarding risk and volatility. If you have $20,000 and the market drops 10%, you lose $2,000. It hurts, but you can easily earn that back in a month. If you have $1 million and the market drops 10%, you just lost $100,000 in a flash. Suddenly, market swings are not just graphs on a screen, they are the equivalent of losing several years of living expenses. Yet surprisingly, this is where the wealthy find their greatest opportunities. When you have $1 million cushion, a market downturn is not a disaster, it is a clearance sale. You have the liquid resources to buy assets while they are cheap, while everyone else is panicking. This also changes how you view your career. Crossing this milestone does not mean you have to quit your job immediately, but it does mean you are working from a position of ultimate strength. When your assets cover your lifestyle, every professional move becomes a choice rather than a necessity. You can walk away from a toxic boss without fear. You can negotiate for a higher salary because you do not actually need the paycheck to survive. Before we dive deeper into how this changes your access to elite investments, make sure to subscribe to Billy Finance for more strategies on reaching these milestones. Having this financial foundation allows you to take bold risks, like starting a company or switching to a dream career that might pay less but offers more joy. Interestingly, this confidence often leads to even more wealth because you are no longer making decisions out of desperation. You also start to value your time differently. When you are building that first million, every hour spent not earning feels like a loss. But once the capital is doing the heavy lifting, you realize your time is far more valuable than your hourly rate. You might choose to work less, take longer breaks, or focus on projects that are personally fulfilling. Furthermore, reaching 7 figures opens doors that were previously locked. You get access to private equity, real estate syndications, and business buyouts that require high entry fees. If a fund requires a $100,000 minimum, it is impossible for someone with a $20,000 portfolio. But for someone with $1 million, it is just a 10% allocation. Even banks treat you like royalty, offering better rates and using your liquid assets as collateral for massive leverage. But there is a darker side that catches many new millionaires by surprise. the psychological pressure can actually increase in ways you would never expect. A 5% dip for a small investor is a few $100s, but for you it is $50,000 gone in a week. That is more than many people earn in an entire year, vanishing into thin air during a bad market cycle. I have seen people reach this goal and become completely obsessed with their screens, refreshing their accounts every 10 minutes. Imagine suddenly realizing that your financial destiny is hitched to a roller coaster that simply never stops. This realization is precisely why individuals hitting the $1 million milestone begin pivoting toward more conservative investment strategies. They start prioritizing the protection of their capital over high-stakes growth. The level of risk that helped them build that first million is rarely the same level of risk that helps them keep it. When the numbers become large enough to impact your life significantly, your perspective on asset allocation changes. You might have felt perfectly fine keeping 80% of a $50,000 portfolio in volatile growth stocks. However, having $800,000 in that same volatile environment could easily keep you awake at night, even if the percentages remain identical. This move toward preservation isn't merely an emotional reaction. It is mathematically sound. Once you have $1 million invested, your goal shifts from hitting home runs to simply avoiding a strikeout. A 20% loss on a $50,000 account sets you back $10,000. But a 20% drop on $1 million portfolio costs you $200,000 and could erase years of hard work. Despite these new anxieties, something fascinating happens to human psychology at this level. Most people who cross this threshold report feeling a deeper sense of security than ever before. It isn't because the money wipes away all uncertainty, but because it creates a foundation solid enough to survive almost any storm. Knowing that your investments could theoretically fund your life indefinitely changes how you perceive every other risk. Job security feels far less critical when you have years of living expenses coming in as passive income. Gaps in health insurance aren't as terrifying when you have the assets to cover an unexpected medical bill. Even economic recessions feel less like a personal threat when you own assets that historically recover and grow. This newfound security births what we call the optionality mindset. Major life decisions transform from desperate attempts to avoid ruin into choices between several good options. Would you rather live in a high-cost city for the culture or move somewhere cheaper to make your money last longer? Both paths are now legitimate choices because your baseline needs are already met. You can decide to start a risky business or take a steady but boring job. With significant capital behind you, betting on yourself no longer feels reckless. In this scenario, the worst case for an entrepreneur isn't poverty, it's simply returning to your old lifestyle while your money continues to work for you. This optionality reaches into family life as well. Raising children becomes less of a financial burden when you know your portfolio can handle the extra costs. Taking care of aging parents becomes possible when you aren't stuck in a paycheck-to-paycheck cycle. Taking time off for major milestones doesn't jeopardize your long-term future. Crossing the $1 million mark also triggers the compound acceleration effect. This is where the mathematical advantage of large sums becomes almost unbelievable. If $1 million grows by just 8% in a year, you've earned $80,000 without lifting a finger. That is more than what most people can save in several years of aggressive work. This acceleration explains why the second million often arrives much faster than the first. While the first million might take 15 or 20 years of discipline, the large base and continued growth can slash that timeline significantly for the next million. There is another factor that separates wealthy investors from everyone else: tax optimization. When your gains produce substantial income, the gap between a 15% and a 25% tax rate is massive. Strategies like tax loss harvesting and retirement account optimization become worth the effort because the dollar amounts are finally significant. The wealthy don't just have more cash, they have access to a better financial infrastructure. Private banking, dedicated advisors, and complex tax planning all become viable when you have significant assets to manage. These services aren't better just because they are expensive. They are better because they are tailored for complex situations. Perhaps the most profound shift at this level is how you think about your legacy. While building your first $100,000, you are focused on your own safety. But when you have $1 million growing faster than you can spend it, you start looking beyond your own lifetime. This isn't just about inheritance. It's about realizing you've built something that can provide value for generations. Your investments move from funding your lifestyle to becoming capital that impacts many lives over a long period. This change in perspective affects everything from daily habits to long-term plans. In the beginning, every dollar feels precious because progress is slow and visible. You celebrate milestones because they represent years of discipline. But with $1 million generating $70,000 a year, you start thinking in different units. Instead of individual dollars, you count in months or years of financial independence. A $10,000 expense is no longer devastating because your portfolio will replace it in less than 2 months. This creates financial breathing room, where setbacks no longer trigger anxiety. Here's where it gets counterintuitive. The more you have, the easier it is to make even more with less effort. It is as if the financial system has secret levels that only unlock at specific thresholds. Most people don't even know these levels exist. Take leverage as an example. If you have $20,000, banks see you as a risk. But with $1 million in liquid assets, you become a preferred customer. Suddenly, you get better terms on property loans and business lines of credit based on your assets. You can even borrow against your portfolio without selling your shares. This access to cheap capital is how the truly wealthy pull away from the crowd. They don't just save their way to the top. They use their existing capital to buy more assets. It is like having a key to doors that others can't even see. Real estate changes completely when you have significant liquid backup. Instead of scrambling for a down payment, you can move with speed and confidence. Cash offers and bridge financing become standard tools for you. But the biggest change is how you view time and opportunity cost. While building toward that first million, every hour spent not working feels like a waste. You are always calculating if a hobby or a vacation is worth the lost income. Once your capital produces massive returns, you realize your time is more valuable than your hourly rate. This is when people make choices that seem crazy to outsiders. They might walk away from a high-paying job because the environment is toxic. They might take a long break to travel or focus on family. They might pursue passion projects that don't pay well but provide deep fulfillment. To an observer, this looks irresponsible. Why would a millionaire say no to more money? Because when your basic needs are met by passive income, your goal shifts from maximizing earnings to maximizing life satisfaction. The relationship with risk flips completely at this stage. With little capital, every decision is high stakes because there is no safety net. One mistake can ruin you. But with massive assets, you can afford to take calculated risks because you can survive the downside. This paradox is incredible to watch. Those who can afford to lose the most are often very conservative with their core money while being aggressive with small portions of it. They might keep 80% in safe investments while using 20% for high-reward opportunities. This also changes how you interact with others regarding money. In the beginning, you want to talk strategy and share tips with anyone in the same boat. But as you grow, you realize that your financial journey is becoming increasingly personal. When your net worth reaches a significant level, discussing finances becomes much trickier. It is hard to vent about market swings when a single day of losses or gains is larger than the average person's monthly paycheck. Complaining about a bear market feels out of place when your quality of life remains completely untouched by the dip. Mentioning the stress of asset management is a quick way to lose friends when most people are just trying to put a few dollars aside each month. This dynamic leads to an unexpected type of social loneliness that catches many self-made millionaires off guard. The money worries that drive most everyday chats no longer apply to you, while your real problems sound like elite complaints to someone aiming for their first $100,000. This is the core of the reality we are talking about. Reaching the $1 million milestone is about much more than just hitting a specific figure in your bank account. It is about stepping into a totally different economic universe where the traditional laws of finance operate differently. You stop being an employee who sells their time and become an owner whose capital works harder than a full-time worker. Moving from a mindset of saving to a mindset of owning changes every aspect of your psychology and lifestyle. If you are truly committed to financial freedom, grasping this concept provides a clear path for what life looks like on the other side. Make sure to subscribe to Billy Finance for more insights into the world of wealth. Thank you so much for watching, and I would love to hear your thoughts on this in the comments below. Goodbye for now.